Hello everyone, it's another Monday and it's time for another not financial advice, educational episode of Monday Market Outlook. So last week, in response to record inflation numbers, 8.7%, the highest inflation number in the past 14 years, the BSP was forced to raise interest rates by 50 basis points instead of the planned 25 basis points rate hike. Furthermore, we are looking at another possible 50 basis point rate hike in March when the BSP meets. For quite some time now, Philippine inflation really has been symbolized by the onion. Onion prices have surged by as much as around 600 to 700 pesos, peaking in December. But the good news here is that onion prices have recently gone down to around 170 to 190 pesos per kilo. Is this going to signal a negative month-on-month inflation rate when the numbers come out next month? We'll see. Hopefully, this onion symbolism also translates into a more manageable inflation number next month. In the meantime, let's look at the PSE. So the market has retraced a little bit below its support level of 6,750, closing at around 6,744. The market has gone down along the path that we predicted. However, if we look at the short-term uptrend line here, it has already been broken. So let's delete that. Now it has traced its path down to its support level here. So what's next? Is it going to bounce up, or are we going to see further weakness in the markets? Now remember that the Philippine Stock Exchange is on a long-term downtrend line starting from 2018. And the market hit resistance on that downtrend line and has already moved to 6,750. Now for this week, so if the market shows further signs of weakness tomorrow and we end up significantly below this support line, we might see the market headed down to its next support level at around 6,550 here in this level. This level looks like there will be some buyers ready to come in. So in the meantime, if you look at most of the stocks on your watch list, you might see some stocks on trading in a price range. You might see some stocks retracing like Metrobank, SM, or you might see some stocks trying to form a base from its 50 EMA like UBP and Ayala Corp. But look into building up positions on stocks that have formed a base like UBP and Ayala Corp. This is also the start of the dividend season where most companies will already come out with their dividend ex dates and their dividend declarations. So it's also probably a good time for you to consider Semirara and DMC. Now I've put together a list of some of the dividend paying stocks in the Philippine Stock Exchange. Of course, you have your REITs paying a dividend from 5.44% to 8.47%. Of course, you have your dividend aristocrats like LTG, SCC, and DMC paying double-digit dividend yields based on their trailing 12-month dividend payout. So if you are a dividend investor, look at these stocks and look for a good timing to buy into these stocks. Not only is the Philippines experiencing inflation problems, but the US came out with their PPI numbers last week, and wholesale prices rose 0.7% in January, more than the expected 0.4%. Now, to add to that, retail sales increased 3% in January against a 1.8% expectation. The US economy definitely hotter than expected, which has prompted more hawkish dialogues from Fed officials and the possibility of a 50 basis point rate hike in March, right? So if we look at the numbers here, we have CPI coming in line, but the PPI numbers are a forward indicator, which means that as wholesale prices go up, we can expect the prices of finished products to also rise. So the Fed has already communicated that it will raise interest rates twice more in the coming months, and we may not see any rate cuts this year. Looking at this chart for the Fed terminal rates, you see here that the market has been in a disconnect for quite some time. This is supposed to be the terminal rate. Now, the Fed has always communicated that the terminal rate will stay at 5.1%, but the market has been disagreeing for a long time, putting the Fed futures rate to as low as 4.75. After the economic data has come in hotter than expected, Fed futures have steadily gone up to almost 5.3, and now we are hearing talks that the Fed terminal rate might even hit as high as 6%. Now we all know that increase in terminal rates does not bode well for our favorite tech stocks. Now, if we look at the S&P 500 chart, we can see that the market is starting to realize that a Goldilocks scenario is off the table. So the S&P 500 has already broken its uptrend line channel. So let's delete this. Now, the S&P 500 seems to be trading at a range of around 4,180, 418, and then a support of 4050, right? Now, if the market trades below 4050, the next level we might see the market find buyers would probably be here at this level, 398, 3990, right here. The next level after that would probably be here at around, right, at this support level. We're at a critical zone here where the markets might experience more weakness coming off from last week's numbers and hit these support levels, and eventually 3750, which we have been monitoring for quite some time. Now, if the market moves up and breaks resistance here, then we can see a possibility that the market might go up to 4,250, right? Now, this scenario makes a lot of sense because if we look at the options expiration this Friday, look at the levels, right? So this is 405 and this is 418, right? So Wall Street, as much as possible, Wall Street would like the market to sit here at maximum pain, 410, right? Because they don't want to pay these options, right? But if the market moves beyond this, the next level Wall Street wants the markets to be would be at 422, and if the market moves beyond here, the next level would be at 397, 392, which really coincides with the support levels that we've charted here. Let's look at the sector movement here in the past, in the last trading days. So we have biotech, we have consumer staples, we have healthcare, utilities, gold, industrials. We're definitely seeing some rotation happening into the defensive stocks. Now look at the likes of Apple, Nvidia, Google. They're all down, right? The Chinese stocks also are mostly down. But look at the defensives like AbbVie, Cigna, Enphase, Johnson & Johnson, Coke, Pepsi, Eli Lilly, McDonald's. They're all up, right? So we might be seeing the start of a rotation into the defensive. Be careful if you're trading frothy stocks. There's a high chance of tech stocks going down given that interest rates, especially the Fed futures, are already at an all-time high. I hope you found our episode this week useful. Please like this video and subscribe to the channel. Good luck on your trades. Please manage your risk accordingly, and I hope to see you next week. Thank you very much. Bye-bye.